Hey everyone, and welcome back for another deep dive.
Yeah, it's great to be back.
Today we're going to get up to speed on Hindustan Unilever Limited.
HUL.
HUL, exactly.
We're going to use Screener for this one.
That's right.
So think of Screener as like this awesome cheat sheet to the company's financials and stock performance.
Yeah, like a financial x-ray.
Exactly. Yeah, you got it.
All right, so HUL.
HUL.
For me, that's soap,
Okay.
shampoo,
Yeah.
like almost everything in my kitchen.
Yeah. Yeah, you're right.
Is that what they do?
Well, that is just the tip of the iceberg.
Okay.
They actually have over 50 brands across 16 different categories.
Oh.
So yeah, I mean, imagine everything from like your morning cup of tea to the detergent that you're using.
Oh, wow.
Chances are HUL has a hand in it.
Wow.
And we're not talking small scale here.
Okay.
19 of their brands bring in over 1,000 crore, which is over US $120 million each every single year.
That's wild.
Yeah. And just so you know, they're listed on the Nifty 50 and the BSE Sensex, which are like the Hall of Fame for Indian companies.
Wow. Okay, so big numbers.
Yeah.
Big influence.
Mm-hmm.
So financially, are we looking at a healthy company?
So Screener's giving us some pretty good news right off the bat.
Okay.
HUL is practically debt-free,
Really?
which is huge for stability. That's a huge green flag for stability.
Yeah.
They also have a really nice dividend payout of 92.2%, meaning that they share a big chunk of their profits with investors.
So debt-free and generous with dividends.
Mm-hmm.
That sounds pretty good, but there's got to be a catch, right?
Right. Nothing's perfect in the world of finance.
Of course not.
And here's where things get interesting.
Okay.
Their stock is trading at 11.6 times its book value.
Okay.
So what that means is that investors are paying a premium for those HUL shares, betting on future growth.
Right.
But their sales growth over the past 5 years has been a bit sluggish, only 9.5%.
So they're financially solid.
Yeah.
But their growth isn't exactly setting the world on fire.
Right.
What do we make of that?
That's exactly the kind of question a smart investor would ask.
Right.
We're like, detectives here, we need to piece together the clues.
Okay.
Let's look at the quarterly results and the balance sheet sections on Screener and see if we can uncover some answers.
Lead the way, detective.
Okay.
What are we looking for?
Yeah.
What clues should jump out at us? So we're in the quarterly results and balance sheet.
Yeah.
Looking for clues. I always find these sections a bit intimidating.
It can definitely feel like information overload.
Yeah.
But remember, we're just trying to understand the story that these numbers are telling us.
Right.
And one thing that jumps out at me is that HUL's operating profit has been steadily increasing, but their total liabilities have also been increasing.
Wait a second. Back up.
Yeah.
Didn't we say they were virtually debt-free?
Yeah.
How can their debt be going up?
That's the million-dollar question, isn't it?
Yeah.
It's not necessarily a contradiction. They could be strategically taking on debt, maybe to fund new projects or acquisitions.
Okay.
It's a bit of a balancing act.
Right.
Companies want to take advantage of opportunities for growth,
Yeah.
but they also need to manage their debt levels responsibly.
So even though their overall debt is still relatively low, this increase in liabilities is something to keep an eye on.
Yeah.
Okay, what else is catching your eye in these reports?
There's a curious little detail in the ratios section that I think is worth exploring.
Okay.
It's something called inventory days and days payable.
Okay.
Essentially what this tells us is how long it takes HUL to collect money from their customers versus how long it takes them to pay their suppliers.
So break that down for me. What does that actually tell us about their business?
So what's interesting here is that HUL takes a bit longer to pay their suppliers than it takes to collect from their customers.
Okay.
Now, this could be a sign of their strong market position.
Okay.
They have the clout to negotiate favorable terms,
Okay.
essentially holding onto their cash a little longer.
So it's not necessarily a bad thing, but it's like a power move.
Exactly.
They're leveraging their size and their influence.
Exactly. But it's also something for potential investors to consider.
Right.
You know, if their suppliers start pushing back or their customers start delaying payments, that could affect their cash flow.
Got it.
So it's all about understanding the dynamics.
Okay. I'm starting to feel like a real financial detective here.
Yeah.
But before we get too carried away with the case, let's step back and look at the bigger picture of HUL's performance.
Yeah.
What are the long-term trends telling us?
Well, the profit and loss section on Screener gives us a great view going back several years.
Yeah.
And what jumps out is their consistent growth in revenue and profit over the past decade.
Wow.
I mean, they've got a really solid track record.
So even if the recent growth is a bit more modest, They've got a history of success.
Yeah.
So it's all about context.
Right, a single snapshot
Yeah,
doesn't tell the whole story. Right, like comparing a single frame of a movie to the entire film.
exactly.
To really understand HUL, we need to look at their performance over time.
Right.
Compare them to their industry peers.
Mm-hmm.
Factor in the overall economic climate.
Okay.
It's about putting all the pieces of the puzzle together.
And speaking of puzzle pieces,
Yeah.
earlier we talked about that increase in debt,
Right.
even though they're considered almost debt-free.
Yeah.
Is there anything else we can glean from these reports to understand their debt strategy a bit better?
Well, we can see that their operating profit margin,
Oh,
which is the percentage of revenue they keep,
okay.
after paying for things like materials and salaries, has been hovering around 23 to 24%,
Okay.
which is a pretty healthy margin.
Okay.
Indicates that they're managing their costs pretty well.
So that steady increase in operating profit could actually be good news
Yeah.
for investors.
Mm-hmm.
It means they're generating more profit from their sales,
Right.
which could, in theory, be used to offset any risks associated with their debt potential
Artist.
strategy.
It's all about balancing risk and reward.
Right.
That's what makes this deep dive so fascinating.
Yeah.
We're starting to see a more complete picture of HUL
Yes.
with both its strengths and potential challenges.
Okay. So far, we've got a financially strong company,
Yeah.
diverse portfolio, commanding presence in the Indian market.
Mm-hmm.
They've got a history of solid performance,
Right.
but their recent sales growth and that increasing debt are definitely worth investigating further.
Absolutely. And don't forget their stock is trading at a premium.
Yeah.
So investors need to weigh whether they're willing to pay that premium for
Yeah.
potential of future growth.
Right.
This deep dive has given us a great foundation,
Yeah.
but it's just the beginning.
Right. But before our listeners starts digging into the finer details of HUL,
Yeah.
there's one more piece of the screener puzzle that I'd love to explore,
Okay.
the shareholder breakdown.
Okay.
So we know the Unilever Group has a majority stake.
Mhm.
But what about those other investors? How much influence do they have? We've spent a good amount of time, looking at like all the numbers and stuff.
Yeah.
But I'm curious about the stories
Yeah.
behind them. Is there any way to kind of get a more qualitative sense of what's happening at HUL?
You're thinking like a true investigator.
Okay.
And yes, Screener actually gives us access to a whole treasure trove of documents that can help us do just that.
Oh, okay.
Think of it as going beyond the headlines and reading the actual book.
Okay. I'm intrigued. What kind of books are we talking about?
Well, for starters, we have the annual reports.
Okay.
These are essentially a company's yearly autobiography,
Yeah.
laying out, their achievements, their challenges, their plans for the future.
So if I really want to understand HUL's long-term vision,
Mm-hmm.
their strategy, the annual reports are like the place to go.
Absolutely. They'll give you a much deeper understanding of their different business segments, their marketing campaigns, their sustainability initiatives,
Right.
all that good stuff.
Yeah. And what I love about Screener is that it has annual reports going back several years.
Exactly.
You can see how their thinking has evolved over time.
It's like having a time machine for a company's strategic journey.
Wow.
You can see how they responded to different economic conditions, consumer trends, you name it.
This is amazing what other books are hiding in this treasure chest.
Next up, we have credit ratings,
Okay.
which are like a company's financial report card
Okay.
issued by independent agencies.
Okay.
They assess the risk of lending money to a company.
So a good credit rating means they're considered financially stable and likely to repay their debts.
Exactly.
What's HUL's credit rating looking like?
HUL actually has a pretty strong credit rating, which aligns with what we've seen so far.
Yeah.
And Screener provides links to their latest ratings so you can get the full scoop directly from the agencies.
Okay, so we've got the autobiography, we've got the report card. What else is there?
Now for the real insider scoop, con call transcripts. These are transcripts of the earnings calls that HUL executives have with analysts and investors every quarter.
Ooh, sounds juicy. What kind of things do they talk about on these calls?
They cover a wide range of topics. I mean, they go over the latest financial results, of course, but they also dive into their future plans, the challenges they're facing, their outlook on the industry as a whole.
It's like getting a direct line to the CEO's brain.
In a way, yes.
Wow.
You get to hear their unfiltered thoughts and insights, which can be incredibly valuable for understanding the company's direction.
And like everything else on Screener, they have an archive of these con call transcripts. Go back years, right?
You got it. You can literally listen to the company's story unfold over time, hearing how their strategies have adapted and how they've navigated through various challenges. It's really fascinating stuff.
I'm starting to feel a bit overwhelmed by all this information. What's the best way to approach all these documents? Any tips for our listener?
Don't feel overwhelmed. Think of it as a choose your own adventure. Start with what interests you most. Maybe you're curious about their latest acquisition, so you check out the con call transcript from that quarter.
Right.
Or maybe you want to dive deeper into their sustainability efforts, so you start with the annual reports.
So it's all about using these documents to answer the specific questions you have about HUL.
Exactly. And remember, this is just a starting point.
Right.
There are tons of other resources out there, from industry reports to news articles. Screener gives you that solid foundation, but it's up to you to build on it.
Okay, I think that's a perfect note to end on. We've taken a deep dive into Hindustan Unilever Limited today, exploring their financials, performance, shareholder structure, and even that amazing treasure trove of documents that really bring the company to life.
We've seen that HUL is a financially solid company with a diverse portfolio and a strong market presence, but we've also uncovered some areas worth further investigation, like their recent sales trends and that increasing debt.
So the question for you, dear listener, is, what piques your curiosity about HUL? What aspects of their business do you want to explore further? Use the tools and insights we've discussed today to continue your own deep dive.
And one final thought to ponder. We focused on the financials today, but what about the external factors that could be influencing HUL's performance? Things like changing consumer preferences or the rise of e-commerce. Those are all forces that can shape a company's future, and they're worth keeping in mind as you continue your research.
Until next time, happy investing.